Hi everybody, today I'm going to talk to you a little bit about something that everyone should know about, but a lot of people feel really inadequate about talking about, and that is investing your money. There are many reasons people choose to invest, but one of the main reasons and most important that everyone should invest is to be able to retire with dignity, to be able to have a nice retirement nest egg set up for once you finish working. Something that I would like to start off talking about is Social Security. The government has set up a plan of Social Security so that people are able to go and retire without worrying about investing per se. I would like to say that the Social Security situation right now is negative. You don't even get back what you put into it, so it's a negative investment. Most investments, you get more than what you put into it based on interest, but with Social Security, you don't even get back what you put in all over the years. So I wouldn't count on it completely. I would suggest and encourage someone to invest into their company's 401k plan. This plan is so that your money is being put into an account that is growing and you are receiving money on interest. And not only that, a lot of companies offer the 401k plan, but they also offer an employer match. So you're able to get even more money that you didn't have to work for. And this is just all a way of planning for retirement and be able to retire with dignity. There are many ways to invest, and I do not have time to talk about all of them. That would take a really long time. But something I would like to touch on is stocks. Stocks is the most common thing that people know about but are nervous about investing in, and as should be, they are the most risky to invest in. If anyone is interested in trying to go into stocks, this is a website called Morningstar.com, and when you're on this website, it shows you the day change, which means like has the market gone up or down, and this is the trend over the past, and as you can see, it's up. So right now would be a bad time to invest because it's at a peak, and you want to invest low and sell your shares high. So you buy into the company low, and then you can sell when it's high. And this is something important to remember, just because you don't want to invest just because a company did good last year, because that could mean that their stock is about to go down. Another thing that a lot of people invest in is government bonds. Companies also do bonds, but government bonds are the most common because they are the safest to invest in. People invest in bonds, meaning they give money to the government, they buy the bond, give money to the government, and the government promises to pay you back your money with interest. So bonds are the safest, and you can buy bonds from the government. I would like to talk to you a little bit about asset allocation and portfolio diversification. They're pretty much the same thing, and they just mean that you need to not put all of your eggs in one basket, meaning don't invest only in stocks or only in bonds. You want to invest in a lot of different things. You want to invest in real estate. You want to put money into stocks. You want to put money into bonds. You want to put money into mutual funds. Just to have money in different places is smart. You don't want to put all of your eggs in one basket. A lot of people did this before 2008 when the stock market was doing really good, and in 2008 when the stock market crashed, tons of people lost their retirement. So I'm going to talk to you a little bit about IRAs and Roth IRAs and mutual funds. Mutual funds is a bunch of stocks that you either can choose from, or a lot of institutions like Vanguard or Fidelity have pre-made mutual funds that you can choose from, and you get to choose these mutual funds based on what they're investing in. And a lot of them invest in different things like gold or precious metals, and then certain companies, and you buy into these mutual funds, and you're buying into a bunch of companies basically. And so as the market fluctuates, you will always be able to have increased money. Mutual funds are pretty safe. IRAs and Roth IRAs are individual retirement accounts. So IRAs are pre-tax dollars that come from your paycheck before you get taxed. So your gross income, you're able to take money from that and put it into account, and it grows. And once you go to take it out when you're 59 and a half, you can take it out and then you're taxed on it at that point. A Roth IRA is exactly the same, only you put money into it that's already been taxed. So once you go to take it out, all that money in there plus the interest is all yours without being taxed. And that's pretty awesome too, because if the interest rate is larger in the future, then you have paid a lower tax bracket, which is pretty awesome. Something else that my overall advice for investing is the amount of money you invest and the time that it has to grow. These two things are super important, even in stocks. A lot of people worry about stocks. They put their money in and they want to take it out, or when it starts to go down, they're scared. This is really amateur investing. A lot of people put money into stocks and just leave it. Even if it goes down, they hope that it goes back up past where they invested. Don't take it out, just leave it there. Even in the more time your money has, the greater chance it will have to grow and make more money. This is your money making money for you. That's the great thing about the stock market, is there's not a limit. There's not a set amount. You can make as much money as you can, and that's pretty awesome. And that's just the American dream, is to be able to make money and to be able to have a good retirement. And we can do this from investing and being able to plan for our retirement and be able to do those things that we want to do with our spouses, and once we retire, like serve a mission or travel the world. And when you invest properly, you can do all of these things.